What's going on, everyone? It's your boy Moo Trades. We're back with another video, and we're gonna go over what separates the beginner traders from the absolute pros. And what really does is just simple things. You might think it's overcomplicated, but it's really not. We're gonna go over how to focus on the highest probability trades possible, how to know what direction to trade, when to trade those trades, how to identify the high probability setups, and when to know when trends are over and start looking for trades in the other direction. The day started off with a massive downtrend, and at this point, once we have the first break of the trend, we're always looking to continue to sell short until we have a new low of that trend after a break. But in the case of this first trade, we have a short-term uptrend. We always draw our trend channels no matter how short-term. So in the case of this short-term uptrend, we had a break and a new high, signaling the downtrend is probably going to take over, considering we had a break and no new low of the downtrend yet, and we also had a two-legged pullback. One leg, two legs. Very nice signal bar at the EMA. The only thing that kept me from taking this trade is that the highs were not matching, but if you're an advanced trader, you can take that trade all day long. So now once we had a break and a new low of the overall downtrend, we know that prices can either reverse, or what's more likely to happen is that we're starting to be in a trading range, and prices will kind of go from the lows to the highs before most likely reversing to the other direction. So now we're looking for failed second entry shorts. So we have a new low here, one leg up, two legs up. The reason we're looking for failed second entry shorts is because all the people who are still looking to go short at these levels after the downtrend already had a break and a new low are going to be trapped. So once we had a first entry short, second entry short, failure with this gorgeous bullish bar at the EMA, that was the first really great setup after the market open. So now we had a break and a new high of this short-term uptrend, and prices just were congested and eventually broke out the top of this initial trading range that you would have had drawn. So notice how the market geometry is going to come into play too as we go over the video. So at this point, you wouldn't have this trading channel drawn, but what you would have is you would be looking at all these prices reacting at these levels, and you would have seen a breakout here before finally prices reach the bottom side of the trading range. And this is not a great trade, but it's just to show you guys and illustrate another failed second entry long. New high here, first entry long, second entry long, failure. The signal bar is not great. We're also at these lows, but it would have worked out. And now we have a break and a new low of this short-term downtrend before, once again, prices begin to reverse. We have a new low here, one leg up, a new low, higher low, another leg up, and a failed second entry short. Nice bullish signal bar at the EMA once again. Reversal type bar, reversal setup, because we had a break and a new low of this short-term downtrend. We're bouncing the third time at these lows, and we're expecting to at least reach the top side of this trading range. So now prices finally reach there, and once we see that the highs keep getting higher, but we still have several touches at these levels, I like to see if the prices were really just reacting to what was previously a midline. So in this case, let's get rid of that. But in this case, now what really looks accurate is that prices were just in the bottom side of the trading range before, reacting to the midline, and now they're reacting to the top side of the trading range before we have a break, a new high of this short-term uptrend, and we have a lower high. Everything is screaming to sell short. It's not a failed second entry short, but because the context is so great, I really like taking that trade. So now eventually prices continue to move down. We have a short-term downtrend here, a break, and a new low. And once again, prices are just reacting to the midline in this short-term trading range within the trading range. So I marked this trade right here, this sell, because it's a two-legged pullback. One leg up, two legs up at the EMA, nice bear signal bar. But the reason I don't particularly like this trade is because prices are very congested here. Look how many bars are stacked. And also we had a downtrend where we already had a break and a new low. We're reacting to these lows, so we should really be thinking to buy. And what is a better setup is this right here, because we had a new low here. First entry short, second entry short, failure, and that's why we ended up going higher. And then prices just once again tested these lows, pushed up, and we had a very nice higher low at the key level once again. This is a nice bullish signal bar, and finally we broke out and reached the top side of the trading range. Now we had a break and a new high of this short-term uptrend before resuming a new trend. We have a break, attempt at a new high, but we really just have a lot of congestion. And what we have here is a trap trade that might look tempting to some, but here is why you should not be taking that trade. So we have a break, no new high yet, so you might still be thinking to buy. But if you take a look at all these bars stacked up, there's 1, 2, 3, 4, 5, 6, 7. There's 8 bars stacked up right there. What you might have seen is a new low here, first entry short, second entry short, failure. Thinking, okay, prices are reacting here several times. What it really just looks like a mini trading range once again. We can at least reach these highs. But in reality, if bars are stacked, that always takes precedence no matter how great the setup looks. So in reality, we had a short-term downtrend here that must be respected. We had a break, no new low of that short-term downtrend, which we finally got, and then prices did exactly what we thought, and they broke higher. So now at this point, prices just continue to be in a overall trading range, and the reason this setup is different from this is because we have the short-term downtrend, we have a break and a new low. Prices are reacting several times here. It's also a new high, first entry long, second entry long, and prices went up. Once again, we reached the top side of this trading range, and we see that prices are kind of doing what they did earlier. They were in this what looked like a trading range. They went to the top side of the trading range. So if we had our trading range like this and we just extended it once prices moved up, we can see that the midline might come into play later on. And once again, we had a new low after a break of this short-term downtrend before we attempted to reach top side of the trading range, but had a couple more legs down. Let's draw our short-term downtrend. We have a new low here. First entry short, second entry short. We're still looking for a new low. That is a very nice trade, and it would have worked out. So now we have a break and a new low. We're reacting to these levels once again, and we can start thinking that this short-term downtrend is over, and we can look for longs. So we have new low here, first entry short, second entry short, failure, but the signal bar is not good. And prices are sort of just in another sort of trading range here. So this trade that I marked actually had a lot of signals to go long. We had a new high. We're expecting to reach the bottom side of the trading range, which we did. We had one leg down, two legs down. And then all the people who were looking to sell sold below this bar because it's a new high, first entry long, second entry long, failure once the next bar broke above that or below that bar. However, you don't want to be looking for shorts because, like I said, we're at the bottom side of the trading range. We already had a break and a new low of this short-term downtrend. So once we have a higher low, trapping all the traders who went short beneath that signal bar, that was a nice trade for a scalp. So eventually, we ended up trading lower and lower before having a short-term uptrend. We have a break, new high, and that's how we ended the day. Notice how the midline came into play once again. We sold right at the midline. It's just something to keep in mind when you're trading, see how market geometry comes into play. And also this midline is just the midline of this overall trading range. Just another thing to keep note of. Let me know what you guys thought of the video. Hope you guys enjoyed it. Peace out.